Welcome back to Fast Market on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment. For that, we want to bring in our next guest. We've got Landon Swan, co-founder of LikeFolio, joining us. Today, you all have new data on Draftkings. And look, this is under some pressure today. There's all this competition around Draftkings, especially as it relates to now the prediction markets like Kalshi. What does your latest data show us? Landon?
Yeah, I mean, when you look at DraftKings, you know, for a long time, it was just DraftKings and FanDuel. Who's going to win, right? You know, I'll give you the answer to that. DraftKings is doing much better. They're plus 17% on a year-over-year basis. Flutter or FanDuel is down about 2%. But that it's not the story anymore. Now it's more about these prediction markets, which are, you know, very, very similar when it comes to the user's experience, very similar to placing a bet. I mean, the difference is that you can buy and sell in real time. It's a lot more fluid. You know, it's more like trading a stock than it is betting on a game, which once you bet on a game, you're kind of locked in until the end. So I think it's a different beast. It's not the traditional way of betting, but it's getting a lot of attention and it's a lot of growth. Those numbers that I gave you for DraftKings up 17 and Flutter down 2, those prediction markets are up around 40 or 60% year over year. So people are really getting into it. Now, that's from a lower bar. It's sort of new to people in the sports betting world. I think it mostly started off in politics and things like that, bet on the presidential election. But now you can bet on futures of games. You can bet on games in game. So that I think it really lends itself towards that sort of live betting that a lot of the sports bettors are moving into. In fact, DraftKings, you know, their live betting itself is up 16% on a year-over-year basis. So people really like the ability to place wagers or change what they're doing during this 2 or 3 hour long game instead of deciding beforehand and crossing their fingers and just watching. Just, you know, I think it's more fun and it gives them, I guess, more action and more flexibility with their betting. You know, DraftKings has been doing well. I mean, they just had revenue that was up 37%. They crossed $301 million EBITDA. They've increased their hold margins by 1%. You know, they're doing really well, but they've got this new competition that's, I guess, different. I would say, I don't know if it's less regulated, but it's differently regulated. That's more favorable because it's not sports betting technically. It's, you know, it's futures trading. So they have easier time getting adoption across all the different states. So it's a bit of a concern because, you know, you guys know me. I like to bet sports. I like to do all that kind of stuff. It is more fun to be able to make decisions in game rather than not. And so that's why live betting's up. I think that's why the futures markets or the prediction markets are doing well, whether it's Kalshi or Poly Market. Either one of those are great. So, yeah, I think it's a tough spot for DraftKings to get into. I think they need to battle this. And the way that they've chosen to do it is interesting. So they've got live betting. They're pushing that. But I think their real strategy seems to be through adoption and distribution. So they've got this partnership with NBC Universal, which is going to get them in front of, you know, that's going to cover the NFL, the NBA, NCAA, Premier League, golf, PGA, even the World Cup. So everything, they're going to have access to all of those users, and they're actually going to prohibit competition from being displayed on there. So on those sports, so they're going to get the eyeballs. I think that probably the prediction markets are likely a better product, but it really comes down to distribution. And that's one thing I've learned as an entrepreneur. You got to have distribution. So I would say that their play is less. It's more indirect way of attacking this competition, but I think it's probably going to work in the long run. It's probably smart, especially as they develop their live betting to compensate for the prediction market competition.
Landon, when you look at this, I mean, the pullback 17% so far just this week in DraftKings stock. And, you know, I get it. I like to, you know, bet on games, but I'm not doing it by a minute basis. Is that trend continuing? Because it seems like it sets up for these prediction markets perfectly. But at the same time, Landon, the battle that these companies like Flutter and DraftKings have had to go through Penn Gaming just to get licensed to actually allow betting. The prediction markets don't have to do this. Are you guys seeing any signs that, hey, you know what, you might be making bets on these prediction markets. If they open this up, this is going to open up a can of worms as far as regulation goes, and that's a benefit to DraftKings.
Yeah, I think so. I mean, the problem is it's a huge moat, but DraftKings and Flutter and all those have largely crossed that moat. right? So I think they would be more in favor of stricter regulations at this time because it's in the rearview mirror for them. They don't want to open up the competition. It looks like it's headed that way. Who knows, with, what may happen. Who knows what may happen. But yeah, they're kind of in a tough spot because I think if you asked them 10 years ago, they say, yeah, let's open it up. Everybody can do it. Now they're like, well, hold on. We've got the lead regulation wise. We're doing really well. We've made, they've made all the inroads, and now some of these other companies are going to come in and kind of go around that through this very technical definition. It's semantics almost. I mean, you're betting on the game in these prediction markets. It's just you're doing it in a slightly different way. But I will agree with your point, Tom, about minute by minute. I think it's fun occasionally. Like if you're watching one big game, it might be fun to do that for the average user. But for most users, they want to bet on their team and just see what happens. Or maybe they want to put in a crazy parlay with 5 legs and see if they can get 20 to 1 or whatever it may be. I don't think it's definitely disruptive, but I don't think it's just like a total game changer. Whereas the partnership with NBC Universal and getting eyeballs in front of people, getting in front of all those eyeballs and blocking the competition could be a bit of a game changer. So it's interesting. I think it's a cool wrinkle. I don't know how it's going to play out. I don't know if it's as big of a deal as a lot of the investors are making it. I think this may be a decent buy on the dip opportunity because, frankly, when it comes to the user's experience, the difference between betting on a prediction market and trading in-game versus live betting is very small. I mean, if you can go in there in the middle of the second quarter and you can bet on your favorite NBA team through a live bet, that's very similar to buying shares of the team winning the game during the second quarter. So it's a very similar experience, and I think that distribution is going to continue to give them the advantage.
Len, and let me ask you this. The Bear Cave put out another report today about DraftKings. They're calling it more problems at DraftKings. And they're talking about the impact of prediction markets like Kalshi. And they think that investors, use their words, are underestimating the long-term threat posed by prediction markets. Because the thing is, prediction markets are being categorized as that, right? They're not being categorized as sports betting sites. And so, they make the point that prediction markets offer better odds, more liquidity, and then unrestricted live game betting. You've got better cash-out options. So does that mean in the long term the heat is really on DraftKings when you think about the disruption that's occurring from the likes of a Kalshi?
Yeah, I think so. I think there's definitely some heat, but I do think it's a bit overblown in that DraftKings has the ability to adjust what they offer, right? I mean, they can decrease the odds on live betting. They can keep live betting open longer. They can increase the max bet on live betting, which answers all of those questions about liquidity and timing and all of the other things that prediction markets give you. So they have the ability to react. It's not as if they just can't do anything like that. I think that the live betting is the answer to prediction markets. You just have to give people more options, and I think they can be very creative. I mean, we've seen what they've done where it used to be you could only bet on the Eagles -7, and now you can bet on the specific quarterback to have this many yards passing or this guy to have a touchdown, yes or no. You can get really specific, and so they have the ability to adjust their offering, and I think really it's going to come down to that distribution, because the new bettors coming in, they're going to bet on what they see. And if they're watching the NBA, they're watching NFL on NBC, and they see an ad or they see a ticker for DraftKings and they see the live odds right there, they're way more likely to go to DraftKings than they are to go figure out how prediction markets work. It's just more ingrained, I think, in people that sports betting is more traditionally ingrained in the way that it is now. Yes, prediction markets are cooler, but I think that they can battle that and get there with the live betting. So I think it may be a little bit overblown. Give them time to react, and let's see how things play out.
Final question here, real quick here, Landon. Are you guys buyers on this dip based on your data?
Yeah, I think this dip warrants a little bit of a buy. I would love to kind of wait and see what they do, but the opportunity's here now, right? I mean, if the stock was trading at $40, $45 somewhere in there, then I wouldn't like this news, but it really reacted negatively here. And I think it may be an overreaction as we see how things play out, because again, they have the ability to react. They've shown in the past that they can react and they can adjust to all the different things like fantasy sports and all of that, all that in-game betting. So I think that this is probably a good opportunity to buy long-term, because they have shown the ability to react, and I know just based on their product line, they can mimic those prediction markets very closely with live betting. If they just pull down the juice and make it a little bit more liquid, they'll be right there. And then there's no reason to go over to these other websites.
Okay, we shall see. That is Landon Swan, co-founder of LikeFolio, with the latest data of across DraftKings and the